Welcome to Momentum Monday. Today is January 29th, 2023. Howard, how do you feel about the market here after that pretty impressive rally year to date, especially in tech stocks?
Yeah, I think we talked about it a couple of weeks ago. I was talking to a lot of people saying it was hard not to be constructive. And it's just it's nice to see some follow through on some of this stuff. I mean, you've got I think so far one of the worst months ever for value versus growth. So kind of a changing of tone from what the end of last year brought in, and everybody has been selling rips. So it's interesting to see stocks just, kind of not sell off this month. So constructive still. I mean, I think you got to be careful of chasing. A lot of frothy stocks were back running again.
Yeah, definitely on Friday. I mean, Lucid at some
Yeah.
point was up 100% intraday.
Yeah, so people are buying, so that's good. Just, I'm not in the mood to chase, but there were some good buys. Tesla has had a great rally. We talked about that at the end of the year for a trade. I think the stock be up 100%, still be below its 200-day moving average. So, in hindsight, it seems obvious that we were due for a bounce. What do you think?
So I'm saying the same thing you're seeing. I mean, we're in the midst of earnings season, and for the most part, the market has decided not to pay attention to any of the bad news, especially in tech, and to embrace any sliver of good news. I mean, for example, Microsoft, they beat estimates, but they guided down. In any other market environment, even in a bull market, it would have been down 5-6%, and it was when it opened on Wednesday. Then it fully recovered and it went higher. It just comes to show that the market is really, really looking for the slightest reason to buy and accumulate tech stocks. For now, the market is betting again that the Fed is going to slow down and it's going to change its tune. And it seems like the market has done that several times in the past 6 months, and it's been wrong every single time. So at some point, it'll get it right at some point. I don't know if it'll be this week, but at some point it'll get it right. So definitely the dip was bought again. As I said, because of that Microsoft miss, a lot of stocks opened down on Wednesday, and then we saw a pretty impressive recovery. Everything close near the highs of the day, fully recovered, and then from there it was continuation. So definitely positive reaction to a lot of tech earnings. Tesla, another example. Tesla, Netflix, Microsoft, none of them had incredible earnings, but they had incredible reactions, market reaction to their earnings, which is important because it's a testament to current market sentiment. So the dips are getting bought, earnings breakouts are following through. We see bigger volume bars on the up days than on the down days, which is a sign of accumulation. I think the one thing that can change the current market mood is the Fed. There's an FOMC meeting and press conference on Wednesday.
Yep.
So, I mean, currently everyone expects only a 25 basis points increase, and the Fed acknowledging that inflation has slowed down, which it has. But I'm not sure they'll be as dovish as the market expects. So we might see some short-term shakeouts. Even during the strongest bull market, is completely normal to see shakeouts. They could last only 30, 60 minutes. They could last a couple of days, but it's not going to be that easy, I think. So
yeah. Well, I'm going to use the words constructive again. It's constructive, right? A lot of indexes are trying to cross over the 200-day.
Absolutely. Yeah, I mean, some of them already are above it. The small cap seems to be looking the best, kind of setting up for a potential breakout here near 190. Let's open the weekly.
Yeah. A lot of it could be due to the weak dollar.
Yeah, one of the big
rally.
factors. Yeah, even though it's kind of starting to, slow down its decline, so we might see a little bounce.
Yeah.
And if we see a bounce, tech stocks are going to suffer, maybe, very likely.
Yeah. The interesting, macro stuff is the Ukraine. It's, I don't know, kind of like hearing rumblings again of the nuclear kind of mood.
Yeah, I mean, the defense stocks bounced last week, which is probably one of the kind of leading indicators, signs. Pretty sizable bounce.
Yeah.
Yeah.
So, no, I don't think it'll be straight up. I don't think the sentiment is mixed. People are still pretty bearish. I haven't switched to bullish, but as I said, I've been mentioning constructive. And some of my dogs have been running Shopify, Coinbase.
Yeah, absolutely. Shopify. I mean, and it's kind of still building a base, Coinbase, absolutely. Bitcoin, went up what 30-40% year to date.
Even Robinhood's kind of been running.
Exactly.
And with that Schwab selling off. So it's kind of like, it's not the financials. So it's interesting. I think you're probably having a good time. It's fun to see stocks.
Definitely some incredible opportunities in the past few weeks. I mean, we had a trade in Airbnb. I bought 104 calls for like $1. They went to 16 by the end of the week. I mean, I sold much earlier, but still incredible move all over the place, especially in technology stocks. Like, it seems the market caught up to the fact that, the CEOs caught up to the fact that the market likes big layoffs. So now everyone is.
You know what? I remember making the calls to some of my friends who were CEOs, and they were like, "Fuck Wall Street." When I was telling them that they should be doing cuts and listening to Wall Street, now they all seem to be doing it together. I mean, the interesting thing is that the products aren't suffering. Twitter, with all the sell with all the firings. I don't know if the product's worse or better, but it doesn't seem to be any worse. So all in all, that could be a really good sign. The people will get redistributed. The smart Google people will set companies up. So again, constructive. We didn't see any of this last year. We just kept seeing.
Oh yeah, absolutely. Definitely a lot of tech stocks are under accumulation. Obviously, many of them have still to report earnings, especially the software ones.
And they're going up on they're going up on some serious volume.
Yeah, I mean, there's some pretty.
Doesn't mean they're going to continue to go up, and we could just get sideways, choppy action all year.
Constructive setups here, like Square.
And then from a technical perspective, when January is good, stocks tend to have a good year. So there's a lot of signs, like I said, that maybe at least for a while, the worst is behind us. But we're not working off low valuations here. We still got incredibly high valuations. We still got, the Fed not worried about the stock market, not thinking about the stock market. And then you still have the inflation, problem. I think natural gas completely imploded. So that's interesting. Where's oil?
Oil is holding a little bit better, but still below.
Yeah, so it's down 30% from its highs.
Yeah.
So anyway, so things still line up pretty good for the market. What do you think?
I mean, short term with the FOMC on Wednesday, I would be careful chasing here. But yeah, in general, definitely stocks have been acting constructively, and we're seeing more setups showing up in tech and in industrials and all over the place, really, in retail. So definitely a huge improvement. But I still think that we will have the occasional shakeouts that will look pretty scary for most people. So it's not really easy to hold winners in this environment. So, but you're right that many people don't believe in this rally, and many are
but it's I guess
underinvested
the U.S. money market funds
or overhedged.
U.S. money market funds at all-time highs. We see some other hedge funds. Just looking through some charts, are not chasing this rally. But at the same time, as I said, some of these frothy stocks like GME, they're having a run. The money confidence level feels.
Yeah, all of them on Friday. So many of them definitely try to rally. I mean, anything. I mean, the two huge topics. Like on Friday, it was electric vehicles because of Tesla, but also anything related to AI. It's kind of trying to break out. I don't know if there are other stocks, like the smaller one. We're talking Microsoft and Google's, which are also doing well. Are starting to. I mean, look at this volume 9 times. Like it's a pretty serious short squeeze here.
But I mean, they were all down 90%, so this can go on a while. But yeah, this has not been a good sign with some of the rallies over the last year with this bullish sentiment from retail. And then the cost, I think if you are long, I would say that the cost of downside protection is reading as at a 2-year low.
It's very cheap.
Right. So the VIX. So if you want to stay greedy, there's probably a good way to hedge with some puts here because the cost of them is, like I was reading here, 2-year lows. So there's a bit of a squeeze going on. I'm glad I haven't been short anything. So I'm glad we went constructive here. But it is a bad earning. It's not been a good earning season. Would you agree?
I mean, I'm mostly looking at the market reaction, which for tech stocks has been predominantly positive. Yes, we've had the occasional blow up in finance, but nothing major really. So in terms of market reaction, it hasn't been a bad earning season so far. Obviously it's the market is in a very interesting position, maybe thinking that if there is a recession later in the year, the Fed will acknowledge that and they're going to stop raising rates, maybe even cut rates. But then if there's actual recession, then the earnings will drop and probably the market mood will change. So you just have to, I guess, still trade them. Like it's still hard to establish any long-term position, even though I tried with some names to do that in the past couple of weeks or so, but it's still small.
Yeah, that looks like a good chart. So what's the weekly look like on that?
This is a recent IPO. It's just recently broke out. One of the high growth names that IPO'd last year. Semiconductor name. Obviously, the entire sector has been super strong. I mean, Nvidia has basically doubled.
Except for Intel. Yeah, except for
Intel is the one that is not doing well, and even Intel is not that bad. Look at it; it finished near the highs of its daily range. So even Intel is trying to rally, which should tell you a lot based on these earnings. I mean, they missed by 50%. Growth is minus 90%. I mean, earnings growth minus 90, sales growth minus 32, and even they were down only 6 on Friday and finishing near the highs. So in a different market environment, this would be down 30%.
Yeah, it looks like I said, if I was really long here, I'd probably just try some S&P puts as a hedge because
or the Q. I mean, they're gonna move together. So
but yeah, I'm gonna let this thing run. I'm hoping to make back some more money on my dogs. There's a lot of earnings this week, so keep track of that.
All the big ones are reporting. I think Apple and Google and Amazon.
But it's nice. Listen, it's nice to not be stressed out about the market every day and let the market kind of do its thing here and work off like what was a brutal 2022. So it's nice. It's nice, but there's still a lot of damage to overcome. And the rates, So we'll see what happens Wednesday, and you know, should be interesting, you know, by the time we get. I wouldn't be surprised to see, you know, the tech stocks get back a little bit at some point this week, and we'll check in next week. All right, buddy, have a great week.
All right, over to you too. See you next
See you,
week.
everybody.